sense. So if you look at the problem and look at the context, I'm sorry, it got slightly cut over here, but it's 30% of people live in cities in India today. That's approximately 300 million people. And this is expected to rise to about 50% in the next 15 years. So I think we are talking about a massive, massive problem here. 500 million people. Government estimates in terms of the shortfall. So you're talking about, by the way, 500 million people, assuming 4 people in a home, you're talking about 125 million homes are required. That's the kind of number that's involved over here. Government estimates in terms of the shortfall is about 25 million homes. It's probably closer to about 50 million is what people say. 25 million homes. Just think about it in terms of the shortfall. That's the kind of opportunity over here. You look at a company like, just to put it in context, you look at a company like HDFC, tremendously successful company. I mean, we have so much to admire in that company. It's been around for about 35, 40 years. The number of home loans it's done is 4 million. I think 3.5 million home loans, maybe 4 million home loans. 4 million. The problem right now to solve in the next 5 years alone is 25 million to 40 million. It's not that even HDFC can't solve the problem that I'm talking about today. You need somebody of HDFC's caliber who's done it for 40 years into 5 times to just solve 25 million homes. So I think this is, it's an unbelievable problem that we are being faced with, but at the same time, as I'll talk about, it's an unbelievable opportunity as well. The government is trying to plug this gap with what it calls Housing for All by 2022. It aims to create something like 20 million homes by then. So again, this is a massive opportunity for people who are really interested in this space, as we are. When we started this company, of course, there was no such talk. We were just talking about helping maybe, 1,000, 5,000, 10,000, maybe 50,000. But the problem, as you can see, is really in the millions. So the need for an MHFC is fairly obvious, that even if the homes are actually built by the government, built by developers, who is going to finance these people? I don't even know what that calculation is, but 50 million into 5 lakhs or 50 million into maybe even 8 lakhs, that's the kind of financing that's really required into this. So it's probably in trillions, really. So who will really finance this? MHFC was set up as a kind of a proof of concept. We know we can't do it all. There's no question about it. You need probably 100 MHFCs to solve this kind of problem. But we were set up in 2008 because nobody was willing to do this. We decided to address this low-income group completely. And when I say low-income, it's basically financially excluded families. As we got into the problem, we realized that low-income is the biggest reason for exclusion. And the reason for that is essentially that people don't have documentation to prove their income. So, a food vendor on the road or a fruit vendor or a carpenter or a mechanic will not really have documents to prove their income at all. And that's really the main reason why banks will not give them a loan. But as you get into it a little bit more, you'll find that single women are perhaps excluded. Perhaps if you're older, you might be excluded. The most ironical thing of all is if you're living in a slum and you want to get a home loan to move out and buy in a much better place, you'll be excluded, because you currently live in a slum which is like a negative list. So, there are all sorts of reasons for people really being excluded in our country, unfortunately, by mainstream financial institutions. And this is the gap that MHFC was really set up to address. So banks and housing finance companies don't really cater to families from this sector at all. And it's estimated that 90% of our workforce, as I said earlier, which is probably 200 million plus, is in this segment. So all the companies that we quite admire today, like HDFC, as I said, which has done 4 million homes, or a Grah Finance, or a Divan Housing, or a India Bulls, etc., are really catering to, and doing quite well, by the way, are really catering to about 10% of the segment only. So we're saying that there's a massive opportunity if you can manage to find a business model that can look at the 90% segment as well. So really, there's not just a need for an MHFC, but there's a need for maybe, 100 HDFCs, I would say. So the mission is very, very simple. We do only one thing. We do home loans, and we only focus on financially excluded, lower income families. That's it. That's all we do. In fact, it's enshrined in our articles as well, without any change really possible. And in terms of a strategy, to be very honest, we don't do anything different, and we don't want to do anything different from mainstream financial institutions, in the sense, the product is very, very simple. It's a home loan. It's a simple 15 to 20-year product. And it is actually secured, by the way. It's secured by the home. Just the way that HDFC secures your home if they give you a loan, we also secure it with exactly the same kind of, it's the same security that we take. The regulation is the same. We all have the same regulator with the National Housing Bank. Typically, pricing, tenors, all that is very, very similar, really. The only key difference, and it's really a key difference, is that we are catering to a different segment. So we don't really have to change too much around the product, don't have to change too much around thinking. Yes, we have to spend a little bit more time in explaining to, a lower income family who may not be as educated as you all in terms of understanding the risks associated, the responsibilities associated with taking a home loan. But really, it's exactly the same. The difference is from what people tend to say that we are a social business. Yes, I mean, that's really the core of what we are. But as Professor said earlier, is that we want to be a financially sustainable business as well. And I think that's perhaps what people think of when they think of a social enterprise, as different from an NGO. We're straddling the middle of serving a big social need and hopefully proving to be a financially remunerative, financially sustainable business that investors and bankers and people can put in more and more capital into. This is not a charity, as I said, and borrowers are treated, we think, with respect and dignity, just like any other customers are afforded. So who are our customers? I'll just give you a quick glimpse of them. I'll just run you through 2 or 3 over here. So for example, this is Sunita and Eknath Dabholkar. They are customers of ours in Boisar, which is just outside Pune, a cook and a security guard. Together they earn around 30,000 rupees. I mean, they should get a home loan easily, but you'll be surprised. They struggle. They don't get a home loan at all. Because, for example, as a cook, you might be working in 5 different homes, and maybe 2,000, 3,000, 4,000 rupees from each of the homes. Nobody's going to give you a certificate. Even if you get one, nobody's going to believe that certificate. Very difficult for them to really get a loan. So they have a loan in a place called Boisar outside Bombay industrial area. Ajay Mondal is an auto rickshaw driver in Calcutta, and his is an interesting case. He had found a home. He was staying in a hut. I'll show you pictures of that later. He wanted to buy a home, which is about 5 lakhs. He had actually been saving for it considerably over the last many years. Every time he had a certain amount of money, the home price just kept going up. I mean, that's typical of all of us, I guess. But he had actually saved 3 lakhs. So he only wanted a home loan of 2 lakhs. And that's another quite funny feature in the segment that we deal with. They have usually money to put down for the home. They've been saving for a long time. And even though we lend up to 85% of the purchase price, our average is probably closer to 65, 70%, because people do have that kind of savings that they have to put in. So in his case, he just took a 2 lakh loan on a 5 lakh house, really. Jyotsna Karkar is an embroiderer. Her whole family actually does embroidery, she has 2 daughters as well, and her husband is a tailor. They all work out of their home in Surat, and they bought in the Surat Municipal Corporation project. If I remember right, it's about 6,50,000, and their loan is for 5,20,000. So the income is not bad, by the way. As you can see, it's 35,000 rupees. It's not like it's a very, very low kind of income. We've given loans to people whose income is 8,000 rupees, 10,000 rupees. So I think 35,000 rupees for us is actually quite high, really, but still would not get a loan from anyone else. Beena and Sham Devi are kind of roadside dhobis. This is in Jaipur, and they have a stall set up in a residential colony. So they pick up the clothes from the colony itself, and they are dhobis over there. And I think their income was around 15,000, not that much, but they've prepaid their loan completely. They took a loan of 3 lakhs from us around 3 years ago, completely paid off. The other feature in this segment, we think, is that really whenever they get a little bit of extra money, they want to pay it down. They don't want to continue with this loan anymore. They're actually quite debt averse, oddly enough. So this was a customer that actually paid us off. So we started, as I said, in 2008. It took us some time to get the license because, oddly, you have to go to the National Housing Bank to get a license. And for the first time, I think the National Housing Bank received an application from people who were a bit random, I would say. We had 3 of us as promoters, and a bit random in the sense that most housing finance companies till then had been subsidiaries of banks, subsidiaries of insurance companies, or part of the Tata, big kind of business houses. There's a Tata Housing Finance, there's a Reliance Housing Finance, there's a Birla Housing Finance. But, 3, I would say hopefully professionals coming to them and asking for a license was a bit of a, unusual thing for them. So they took about a year to give us our license. And I think what they really liked about us, and I think why they gave us the license, was exactly this, our focus on the weaker section, focus on lower income families. So we got our license in 2009, started giving out loans in about May or June 2009. And since then, we've given out about 16,000 loans, home loans. That totals at about 5 lakhs a home loan, or 4.5 lakhs, is about 700 crores really. And the business, I would like to say, or like to think, has done quite well, in the sense that we are among the best in terms of most industry benchmarks. We have a long way to go. But in terms of, say, NPAs, for example, the industry is about 1 to 2%. Obviously, HDFC and some of the better ones are about 0.5%, 0.75%. But considering people were not willing to lend to this segment at all, for us to have a 1% NPA as on March 31, we had 96 customers who were not paying us on time. NPA, I don't know if you know, is defined as somebody who doesn't pay you for 90 days. So it's not an actual write-off. The company has not had 1 rupee as a write-off till date. The incredible thing is that, yes, people may have a difficult time in paying for some time, but there is a takeout. You can always go and perhaps with their permission, etc. You can sell the house, you can recover the money that way. But as on date, on March 31, we had only 96 people who were not paying on time out of about 10,000 customers at that point of time. So it was around 1%, which is very much in line with in fact, our business model caters for 1.5%. So it's actually below what we were expecting in any case. It caters to really first-time homeowners. So about 96% of our customers are all first-time homeowners. They're moving out from very difficult conditions. Usually in big cities, it would mean moving out from a slum, moving out from a chawl or something like that. The incomes of our families are usually 15 to 25,000 rupees. The net worth of the company today is about 100 crores. We made profits of about 6 crores last year, hoping to make close to about 9 crores this year. So that means, we have a return on equity of around 9% this year, but moving towards a target of around 15 to 18%. And I think we're not more than about maybe 2-3 years away from that. And I think this to me is, I know we already do a good job, frankly, in terms of being a good social business. I know we only cater to people who need our help and who are desperately looking to own their own home, improve their conditions, etc. I think what we haven't yet proved is the financial part of it. But we're not that far off, and we're on that kind of track for that. It's probably about a couple of years to be, as I said, about 15 to 18%. And that, by the way, is what a Kotak Bank or an IndusInd Bank I think RBL is about 12 or 13% today in terms of return on equity. So it's probably exceeding what I would think what a social enterprise should do. I mean, if I was an investor in a social enterprise, I'd say 9%, I think you've done what you should be doing. You're providing a service and you're achieving a probably better than 50% return on a fixed deposit. I think is pretty good. But I think we are in a situation today that we can probably aim for about a 15 to 20% return and keep both sides very happy, attract capital in a much, much bigger way as well. I'm happy to say that on both sides, I think we've done quite well. 2 years ago, I think we got, 2 years ago, I think we were nominated for the Financial Times UK paper has this award for entrepreneurship, and we were on the last 4 nominated. The year before we won, it was won by Uber, so it's in quite a good award, I would say, in that sense, even just to be nominated. But I think the one that we're really more proud of is the Gears rating. We are rated as, Gears is the top rating agency around the world for social impact. I think it's called Global Impact Rating System. And we're a 5-star rated company. We're also a platinum business model rated company, both of which are the highest levels in terms of what you could get as in terms of impact rating. So I think we're quite valued and recognized by both commercial investors, lenders, and social agencies as well. In terms of impact, so as I said, there's a micro impact and there's a macro impact. In terms of the micro impact, we've helped about 16,000 families, as I said. There are about 4 people in a home, so probably about 65,000 people have probably been helped in terms of improving their homes. And if you've been into slums, etc., you know the kind of conditions that there are. And I'll show you some of the homes that people have moved into. It's a fairly big improvement. But I would say the real impact is macro. And this is the power of a social enterprise, really. That if you're able to get your proof of concept right, and especially if you can prove it in terms of financial terms, because your heart may be in proving it in social terms, but if you can prove it even in financial terms, you can change an entire ecosystem. We've seen it actually happen in the last maybe 3 years for sure, but certainly the path has been over the last 5 years. More and more people want to get into the system, into what we are doing today, into low-income housing finance. They're getting more and more confident that informal sector people can pay you back on time. 99% of people are paying us back on time. We've had no write-offs at all. So more and more people want to come into this and start lending into our segment, including, by the way, people like HDFC, people like even established banks are trying to reach our segment as well. So I think this is all a good thing. So in the last couple of years, I would say probably about 100,000 people have been given loans by similar kind of players. And now we see that in front of the NHB, there are about 20 to 25 people who have approached for licenses. Because what we do, by the way, I think it might have been an earlier slide, we're only in 6 states. There are so many more states that need this. I mean, I just read yesterday that the state of Odisha has built 1.5 lakh homes. 1.5 lakh homes. I mean, as I said, we've done 16,000 home loans only in the last, let's say, 7 years. In 1 year, they've done 1.5 lakh homes for lower-income families. Now, I don't know who's financing that. We are not in Odisha for sure. So, I mean, there's a massive opportunity out here for lots of other players. So there are another 20, 25 people who are coming out who want to focus on this segment. So maybe I think we could have a possibility of serving at least 1 million home loans in the next few years itself, because these are much more commercial players. They're going to do it bigger, better, faster, more efficiently perhaps, etc. So I think this is really a power of a proof of concept, a social enterprise. If you get it right, maybe there's the power to really change a whole ecosystem. And I'd like to believe, not so humbly, that I think, MHFC has perhaps played a part in this, creating an entire ecosystem over here. And in terms of a very, very specific impact, so I showed you the picture of Ajay Mondal earlier, the auto rickshaw driver in Calcutta. This was his home, a hut, which frankly, with some really heavy rains, I'm sure would just get washed away completely. It's very, very flimsy. In Calcutta, this is. And this is where he moved into. So this is a project which is called Shuko Brishti. It's a joint venture project between Shapuji Palanji, the good builders, and the West Bengal government. And the cost of this home was for 5 lakhs, really. So he's moved into this home, which is quite amazing, actually. I've been to this place, for 5 lakhs. And he took a loan from us for 2 lakhs to move into this home. Value of this home, by the way, is now 15 lakhs. That's the kind of appreciation that it has as well. So a home is, oddly enough, we think of it as everyone wants a home. It's your security. It's an improvement of living conditions, etc. But it can be a tremendous asset as well. And I think there are various studies over the years that have shown that people lower income families who have moved into the home, it's really the first step towards a major upliftment in their financial conditions, living conditions, taking risks in terms of business, etc., and really improving their quality of life. So I think this is really the impact that possibly a company like ours has had on families. In terms of challenges, I don't want to overstate this at all. I think every business and every entrepreneur knows what the challenges are. And I think it's not really very different for a social entrepreneur. Any entrepreneur knows that, and I know a lot of you are very interested in setting up your own business. The one thing you're definitely giving up is your time completely. It's a 24-hour commitment. You are a problem solver. I remember when I was in American Express, yes, I had problems at work, I'm sure, but for so many things, I could go to somebody else. I could go to my HR person, I could go to my boss, I could go to somebody in operations to help with a loan or something like that. Over here, you are that person. People are going to come to you to solve these problems, right? And it could be 24 hours. One of your loan officers, has a bike accident in Surat or something. You're the one who's going to get that call and say, what next, right? So I think, but this is true of any entrepreneur. It's not just true of any social entrepreneur. But the issues are in every sphere. You have to have the right partners. You're building your team as you go along in terms of, your culture, your financing. I remember there were a couple of times when we didn't know where our next financing was going to come from, right? I think that's true for any entrepreneur, but certainly in a financing business, it's a bit worrying for sure. And your customers, do you really have the customers that you think you're going to have? Systems, processes, regulations. Finally, of course, profitability. Anybody who invests in you is going to ask you where your money is going to come from. So I think these are challenges which you are going to face, and I think one can spend a lot of time on each one of them. But the one difference in with social businesses is the obvious one, right? As I said earlier, unlike other businesses, you have an extra satisfaction that you are helping somebody's problem. And there's a tremendous amount of satisfaction you can get out of that even if all else fails, as you're going through those challenges, that, when you come home and you've helped some, let's say a maid finally realize her dream of 30 years into moving in a home, it's a tremendous satisfaction, which I think no other entrepreneur really gets except a social entrepreneur. There's never really been a better time to be a social entrepreneur. I think the landscape is unbelievable right now. Firstly, you all have seen the landscape change for entrepreneurs in the last probably 5 years itself. When we were here, there was not even a chance of thinking that one of us would become an entrepreneur. I think it wasn't even in our minds really 25 years ago. But I think that whole landscape has changed. Today, people are talking about startups, and startups is really, the reason we're sitting over here, there's a proper class, is because there's such a buzz around startups really, and there's such a buzz about being an entrepreneur. And there have been so many success stories in India in terms of, just being an entrepreneur. But I think in terms of being a social entrepreneur, there's a lot more funding that's available today. Our own funders are MSDF, that's a Dhall Foundation. By the way, that initial grant came in as equity because we didn't take it as a grant, and we said there's a business model out there, so we'll take the money in as equity. And IFIF is the India Financial Inclusion Fund. There's obviously Low Capital, Omidyar Foundation. TPG Rise has just committed $1 billion towards social enterprises. So I think a lot more money is there. There's also well-regarded mentors out there, people like, Narayan Murthy, Premji's, leading kind of, business families now want to dedicate a lot of money into this and probably dedicate a lot of time into good ideas and supporting good ideas as well. And the other big advantage is obviously we're dealing with a massive market. Whether you look at education, healthcare, obviously housing, these are massive markets. You're talking about, in India, 100 million people, 200 million people for any problem that you go out there to try and solve. So I don't think, unlike in a lot of other products, you always think, do I really have a market? I don't think one has to really think about the market over here. And the other big difference from, let's say, when we started, or definitely from 20 years ago, is I think technology is definitely going to be a big game changer. And you all are young people over here, you understand technology a lot better than we do. So I think somehow solving that problem, which was our problem as well 20, 25 years ago, may be very differently solved today. And maybe there's an opportunity to solve it, in a much better. But I think ultimately, my recommendation, just have fun doing this. There is absolutely no downside in being a social entrepreneur. It's not only got all the challenge and all the buzz of building a business. Why do people want to be entrepreneurs, right? I mean, I'm sure there's some financial goals in mind, but I think the main reason you want to be an entrepreneur is that it's utterly liberating in terms of being your own person, your own boss, if you can call it, and building your own company, and the challenge of doing that, as against going and working for another corporation and just, following the herd. I think that's really the biggest thing. But in being a social entrepreneur, you definitely have the additional upside of helping people, of coming home feeling satisfied that maybe you help, 10 people, with a healthcare problem or an education problem, or in my case, perhaps financially excluded.
Hello, sir. Here.
Yeah.
Okay. So as you are concentrating on the 90% segment, so they are not much connected to the mainstream. So how to reach out there? What is your marketing strategy? Means they are not much aware about this type of companies. So how you reach out their customers?
That's a very good question, actually, because I think still people are very unaware of what we do. Obviously, we're only in 6 states. It's not possible to be everywhere. And I think every company will have its own strategy of how you reach out to it. So for example, a year after, I think probably the same year that we were set up, is another company called Mahindra Rural Home Finance. Now they work only in rural areas. And you won't believe it, their strategy is to literally go into those rural areas, in the villages, and go door to door knocking on their home and say, where they've seen a home, a village home, perhaps with bags of cement outside. And they know that this guy is going to build another floor. So they actually go knocking on the door and say, are you going to build another floor? Do you need money? 1 lakh, let's say, do you need? And I will provide you finance for that. So that's their strategy. In our strategy, we work with developers. So the developers are building, let's say, for example, Surat Municipal Corporation or Ahmedabad Municipal Corporation is building 13,000 homes for lower income families. So we go to the Ahmedabad Municipal Corporation and the flat cost is about, I think, 3 lakhs and maybe 6 lakhs and maybe 12 lakhs. It's EWS, LIG, MIG or something. And we go to the municipal corporation and we say, people are not going to have financing even for 3 lakhs. They'll have maybe 50,000, 60,000, but they need a loan for about 2 lakhs. Maybe we can help. So we tie up with them and they give us usually space in their corporation itself because they realize that, yes, this is a need for people who have allotments to, let's say, to make this payment. So we work quite closely with developers in that sense to spread the word. But if you're asking me, how do I spread the word in, say, Tamil Nadu, where I'm not there, I don't know is the right answer. I don't even know, what is the kind of supply out there. The market is just so big. It's only when we concentrate on an area, our strategy is to use developers to spread the word. We don't do any marketing.
Do you, or how, what is your end goal into this space?
So I'm not sure I understood the numbers that you said, but all I can say is I see this being an almost like it's almost a recession-proof industry. I don't know how, one can keep working for probably 25 years over here and still there'll be unsatisfied demand. And the reason I'm saying that is that you look at a company like, as I said, HDFC, they've been here for about 30, 35 years and they're only dealing with 10% of the market segment today. Imagine we are just starting. We don't have 35 years of background. We're just starting today to look at that balanced 90% starting now for the next, I don't know how many years it's going to be. One thing I can tell you, we are not going to achieve this housing for all by 2022. There is no chance of that, right? Because we're talking about 25 million homes being built by 2022. But I think it's worth setting out such a target. I'm not, I'm obviously aligned with what the government is trying to do over here. I think it's important we focus on that target. But even if we achieve that, there's still always going to be housing shortfall, right? We have a population that's always, increasing, obviously.
Then your quantum of the loans will be reduced if this kind of schemes are out into the space. Obviously, you can see the reduction of the housing shortage in India with this scheme. So then will you be able to achieve a higher quantum as you're suggesting 15%, 18% in future?
The short answer is absolutely. Right. Because, even if you feel there's a housing shortage, I don't see, housing problem shortage, I don't see it at all. I live in the city of Bombay, where I can tell you on let's say 20 million people today, 60%, that's about 12 million people are living in the slums today who would love to have a better kind of a condition home, right? So 12 million homes, we've achieved 16,000. So as far as I see it, it's an unlimited problem to solve. It'll probably take us many years. But still, coming to your general philosophical point, I think it's like an NGO, right? If you can fix the problem gets solved, I think that's the greatest success. So if you're telling me that one day there'll be no housing problem in this country and there's no need for an MHFC, I think that's the greatest sign of success for us. Are you talking about the quality of the property? The property itself. So funnily enough, actually, the property is a formal property. We are lending to an informal customer. And on the same project, so even let's say on an Ahmedabad Municipal Corporation project or in the Shukobristi project that I talked about, there is HDFC, there is ICICI, there is SBI, also who are lending on exactly the same flats, exactly the same project. The difference is that they will only lend to somebody who has a salary certificate, while I will lend to Ajay Mondal, let's say the auto rickshaw driver. So the quality of project, quality of property is exactly the same in terms of what we are doing. But people have different models. People have different models. Like I said, Mahindra Rural is doing a village home, a redevelopment of a village home. That's their kind of security. We are more project-based because it was very important for us on day one to really work with stimulating the supply of housing in terms of projects, in terms of big numbers, and not just individual homes really, but there are different models. Income documentation. Documentation to prove income. Yes, absolutely. That is the single biggest difference. Yeah, I think this is really the core of our model, and the core difference really, what makes us different, is that why do people only look at income documentation? I mean, if you look at it from HDFC's point of view, because it's quick and it's fast, and it's, I think, fairly reliable. In the sense, somebody comes to you with a file which has an income tax return, which is filed by the government, and it says your income is, let's say, 5 lakhs a year. You know it's 5 lakhs a year typically. You see the salary coming to the bank statement, you know it's, let's say, 50,000 a month, 6 lakhs a year. You can be assured of that. I think the difference is that for us, it's a lot more hard work. We have to go into the field. We have to actually assess a painter's income, a bhajiwala's income, pani puri vendor's income, and the reason how, and the way that we do it, our difference is it's personal discussion and personal verification. I mean, that's the summary of it. I mean, obviously we do a lot more than this, but what it means is when a painter or a carpenter comes into that particular project and says, I want to buy this flat, and I'm putting down my 20%, I need a loan of 80%. The builder says, talk to MHFC. So they immediately start, that's where the discussions start. My loan officer takes his number and says, we don't have a branch. By the way, we don't have branches at all. We do all our work only in the field. And it's all using technology, using handheld devices where we go into the field, meet the pani puri vendor, and we see his location over there. We take some videos, take GPS locations, etc. We get an understanding of how his business is. We interview him in terms of, we see the crowd over there. We ask him, I mean, you know, these are questions that he himself or she herself would not have really analyzed over the years in terms of what are your margins, you know, where do you buy from and how many customers you get every day. I mean, where do you make these puris? You know, they actually make the puris usually at home, or there's one person who just makes the pani puri ka puri. What's the business model for that? You have to understand those kind of questions. So he buys, let's say, 3 bags worth 300 pani puris. How many plates does that turn into? What is the wastage on that? It's almost like the newspaper problem, you know, kind of thing. So you have to look at each kind of business model and understand the business. Now, having now done, let's say, 16,000 customers and let's say, you know, 500 auto drivers, when I get an auto driver in, say, Calcutta, I can pretty much take a guess he's earning between 12 and 15,000 rupees now. And that data is all stored, and yes, now we have algorithms to show that, you know, of all our auto drivers, what's the range of incomes, what is the midpoint over here in Calcutta, how much is it in Delhi, how much is it in, in Bombay, how much is it, etc. How many of my auto drivers have been paying on time, how many are defaulting on this particular project. So we use technology in a big way now to capture this. But when we started out, and even today, it's personal discussion, personal verification. We spend a day really taking in this data. And that's what makes it, frankly, a lot harder than looking at a salary
group. So what was your so there must be some contingency plan as well.
So I think when we started our business, honestly, we had no idea in terms of how people would pay back on time or not, you know. And I think that is also part of the reason that people didn't want to get into this business. One is that its assessment is an issue, as you said. And the other problem is that people just didn't have the faith that, you know, a taxi driver or a bhajiwala is going to pay back on time. They would feel that these are typically migrants. They're going to go back one day. They're not going to really be interested in your loan. They have erratic kind of incomes as well. They're not going to pay you at all. But, you know, I don't know. I just felt I'd studied at that time the housing finance market. There were people like Growth Finance is, by the way, somebody who's based in Ahmedabad, a subsidiary, 65% owned by HDFC, which caters almost to our segment, not as low, but almost to our segment. We looked at their business model, and they had, you know, something like a 0.5% NPA as well. and HDFC was about 0.5 also, and a lot of the banks were closer to 1 to 1.5%. And we just instinctively felt that whether you're middle income, higher income, and hopefully lower income, at least people in India, I think, are very responsible about paying their home loans on time. They may default on other kind of loans. I think you're quite right. But I think the home is too much of a dream for all of us. And when you finally save up, you finally have the money, you bought your home, you moved out. In our case, by the way, you moved out from very difficult conditions in, say, a slum to move into, let's say, a formal home. It's almost, it would require something quite serious not to really think about paying back this loan. I think that's instinctively what we felt. And that's what the records seem to show, not for our segment, but certainly segments across in India. For our segment, we looked at the records of microfinance companies who we talked about. So in terms of smaller loans, not a long-term home loan, but a smaller loan. And there also the track record was something like 99.5% kind of repayment record. So we felt that the segment seemed to perform on a different product. The product seemed to perform certainly on a different segment. Maybe if you marry the two together, it would perform for both as well. So when we started the business, actually, I think we had a good feeling that it would perform as well to about the 1 to 1.5% level. And that's what it is really today. It's at 1 to 1.5%. Our business model caters for 1.5% actually. It's at that kind of level today. If you ask me what is a contingency plan, I have no idea. If it goes to 10%, I don't know what I'll do, frankly. We'll figure it out.
On low documentation and that.
See, you can charge a bit of a higher interest rate. There's no question, because when HDFC says that they charge 8.5% or 9%, it's because they're giving that rate to somebody who has formal documentation and not to my kind of customer. But I think we've always benchmarked ourselves against the best of the business. And for us, that is HDFC, that is Gurv Finance. And their spread is typically around 3% or so, 2.5 to 3.5%. So let's say about 3%. When I say spread, their borrowing costs and and in terms of their lending rates, let's say. And we always want to be the same. Now, the reason that we are at around 12%, which is about 2.5% higher than, let's say, the best in the marketplace today, is not because this segment can pay a little bit more. Because my borrowing rate is typically about 9.5% today. I'm adding the same 2.5, 3%, because that's what makes it a financially viable model that is required to really attract capital and be in this business, and grow in this business really. So yes, our interest rates are higher. But if you look at our peers, as I said, there are another 10 new people, 20 new people are coming. Typically in this marketplace, I would say is anywhere between 12. We are typically the lowest, or Gurv is actually the lowest at about 11 or so, around 11 to about 18%. And the more difficult the businesses, you could and necessarily should have to charge a bit more. I think Mahindra Rural charges closer to maybe 24%, because what they do is really difficult work. They're doing rural home finance. We are urban based, by the way. They do rural home finance. It's more difficult in terms of accessing, more difficult in terms of collections, etc. So they charge a higher rate as well. We are somewhere on the lower